The U.S. stock market is near record highs. Yet the conflict involving United States, Israel, and Iran remains unresolved. So here's the question. Has the stock market already priced in a peace agreement, or is Wall Street focused on something else entirely? A durable ceasefire would likely include reduced military tensions, reopening of energy supply routes, lower oil price volatility, and less inflation pressure. Investors generally welcome stability. If energy markets calm down, it becomes easier for businesses and consumers to plan ahead. Is peace likely? The challenge is that peace requires multiple parties to agree. The United States may prefer stability and lower oil prices. Iran wants security guarantees and sanctions relief. Israel remains focused on long-term security concerns, but does it even want a peace deal? Even if Washington and Tehran find common ground, implementation could be difficult. Has the market already priced it in? Many investors appear to believe that the conflict will eventually be contained. Why? Because stocks have remained resilient despite months of tension. Historically, markets often look beyond current headlines and focus on where conditions may be 6 to 12 months from now. That suggests at least some expectation of eventual stabilization is already reflected in stock prices. What does the market care about more? Ironically, investors may be more focused on the Federal Reserve than the war itself. Why? Because the conflict matters largely through its effect on oil prices, inflation, and interest rates. If oil rises sharply, inflation may continue to increase. If inflation rises, the Federal Reserve may keep rates higher for longer, and higher rates tend to pressure stock valuations. Let's take a look at the chain reaction. For markets, the sequence looks like this. First, the Middle East conflict. Second, higher oil prices. Third, inflation. Fourth, Federal Reserve policy. And finally, impact on stock prices. That means the war matters, but often only because of what it does to energy costs and interest rates. What could move stocks higher? A durable ceasefire combined with stable oil prices could reduce inflation concerns, increase confidence in future rate cuts, and support corporate earnings. Those conditions would generally be positive for stocks. So while investors are watching the Middle East closely, the market may be asking a different question. Will the conflict keep inflation elevated and prevent the Federal Reserve from easing policy? Because ultimately, that may matter more to stock prices than the conflict itself. Please like, comment, and subscribe. Thanks for watching.